The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 16th, the terrific Thursday, the PGA Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and sellers are tossing out to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you during this next hour. So feel free to pick up that phone, dial on in at 877-927-6648. If you can't dial in, we've got you covered. Send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, if you'd be kind enough to put radio show question, of course, our Tiger's Den. We take any and all pings out there. So let's go ahead and get, speaking of ping, I bought a new ping driver yesterday. In any event, let's what a smasheroonie this club hopefully turns out to be. In any event, let's get back to the show out here. This, of course, is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 250 points. That's about 1% to the upside. The S&P up a little bit over 1%, which is 34 points. 1.25% for the NDX. That's 96 points. Russell up 0.9%, 14 there. The semis are off 19. Spot volatility index is trading right at about its 50-day exponential moving average. So it's kind of, it's kind of at the line of demarcation. But we'll give you the exact numbers. Right now it's trading out at 15.57. Gold is back $11. We're going to start there. We'll come to that in just a moment. Leading the charge, the upside, you got Amazon, $34. Mettler Toledo, $22. Mercado Libre, $20. Google up 18. Booking Holdings up about 18. To the downside, it is Virtue USA. Vert USA. That's where we're going to go at $10 or 18%. Rogers Corp down 8. Wix down 7. Broadcom down 7. Dillard's up $6 and change out there. So let's start with really the first question that came in was from Peter. So let's take a look at Peter. And Peter's question was basically, let me get it here. Steve, your gold thoughts, 1262 is a possibility now. I guess if it closes below the daily asset and change line on the daily, that would be more likely of a possibility. And I wrote back to Peter that it looks like a bottom to me right now. And so let's go take a look at that. Now, remember yesterday when we were on the show, I was saying to you, hey, be careful here, because of the fact that we had that Rhodes Momentum Indicator top signal on the 5-hour time frame chart for gold. And what we talked about here, because as that candle session was coming to a close, that was 2 p.m., we had a bearish reversal candle. That was a dark cloud cover. Price was below Stevie's red line, green line out here. As Peter, now this is a 5-hour line, slightly different than the daily time frame. And what we said was we really have to watch this 1295 level. In this pattern, when it forms a top of any kind of significance, which is what we have right now. So I know it's a little ballsy, so to speak, to say maybe we've made a bottom, but I want to go take a look at that with you as well, because I'm closely watching this just for my own portfolio. So here we have this little bit of a quandary because price broke through that 1295 level with conviction out here. And there's no bottoming pattern or signal or anything that I can identify, Peter, Stevie, any of us out there that says, hey, we've got the topping signal here and no bottoming signal. Last time you had a bottoming signal was the bottom on a 5-hour time frame chart. So we must be cognizant of this. But in order for this to move lower, what's going to have to happen is we're going to need to see another level of support broken. Remember, that was a 5-hour time frame chart. And luckily for you and I, now this is one of Stevie's advanced warning. This is using the super Doppler out here. This is a brand new profile, Peter, that has formed this morning. Now, what I don't know and what you don't know is whether or not this is going to stick in this formation, which is bullish formation, and whether or not the top and the bottom, the center lines are really the numbers. I've got to go with the data I have at 111. Of course, I would always want to use super Doppler with you. So, Peter, we see that this is a bullish structured profile. Granted, prices broke down back below that descending trend line, so we're not exactly happy with that. And I apologize. I see that we've got a caller line, but let me just finish this out here. Let me finish the thought out here. Peter, as long as price stays above 1281.40, and remember 1283, we've gotten down to a low of 1284.20. The 1283 is the area where both buyers and sellers believe there's fair value, and because the bottom of the box where sellers are at 1281.40, you know, maybe prices pull down to the bottom of that level. But wait, we have more. And Brent, I apologize. You're going to have to just wait for this one here, and that is if we take a look at the hourly time frame chart. Is the hourly time frame chart providing you and I with the signal? Now, this made the Rhodes momentum indicator top. We looked at that yesterday with a different dark cloud cover on the hourly basis. And of course, what you and I know, and using the TD set up 9 counts both for support and resistance, these are key levels for us to look at. Now, what we can see on an hourly time frame chart, folks, is that we have that TD set up 9 count to the bottom. You see the green line that's formed way up here at about the $1,300 level, not exactly. But this formed also with wave number 7, that's letter G out here. And so if you want to take an early entrant signal, there's no guarantee, but you now have the bottom of a daily box with your, you know, you got a few dollars to the downside, but the 60-minute chart is saying to you and I that if you're trying to get long, price came back to the breakout area. That's the red horizontal line, and now would be the time to fire away. Now let's go out to Brent in California. Brent, sorry for making you hold through that, but how are you today?
No apology necessary, Steve. How are you?
I am doing well. Let me try to adjust my speaker. I think I got a problem with it, but go ahead. Now, blast away in my ear. Tell me what you're looking at, how I can help you.
I have a question I would like to ask you. It's going to take a little bit of time to develop it, so if you can indulge me and just give me a minute or so to form the question, and I'd like to get your opinion on it.
You got 40 seconds before we go to break, and then we can follow up afterwards. So go ahead. Fire away.
Okay, I'll do my best. The basic premise that I'm trying to get to is just going back a little bit in history. I kind of came out of high school when Carter was finishing up his term, and I'm not trying to make it political, but just looking at,
sure.
I know back then I waited in gas lines and just that whole scenario, and then the high interest rates, and then when Reagan got in there, and the structural changes that he made seemed to have a lasting effect beyond his, 2 terms in there. And looking now at what Trump's doing, it seems like he's doing things that potentially could have, ramifications beyond, that will go out a distance. And so that's what I wanted to kind of propose to you. If you think what he's doing is going to have lasting effect.
Got it. So when we come back from this break, Brent and I are going to have a discussion about this, try to exchange our thoughts both ways. And stick with us, folks. Dow's up 265. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're on the line with Brent in Martinez, California, and we're about to have an in-depth discussion, as in-depth as we can get. And just to summarize, and Brett, I want you to come back because, and make sure you finish your thought there because we had to go to break. But in essence, we're all a product of our own experiences. And so in your case, what I heard is you're going back, taking a look at the political climate and perhaps its impact on the markets. We haven't talked about specifically which market just yet. And so you're back to the days of Jimmy Carter inflation. And by the way, that inflation, I would just inject that we saw there with the high interest rates and so forth, that one of those things that was going on then back in those days was a lack of confidence in government. And whenever there's a lack of confidence, similar to what we've experienced here by looking at Venezuela and Turkey just within the past year, basically, we see when there is that total lack of confidence that that's where you will see this runaway type of inflation out there. So certainly, so that was an environment. And then you move to Ronald Reagan, who certainly made some changes out there. And now you're taking a look at what's going on in the current administration. So that's what I heard. Did I paraphrase that okay?
Yeah, I think the only other part of the question, it's almost a subset of the main question, is that I know we've been in this long bull run since really 2009. But then once Trump was elected, we had another big run, and it seems like there's been things that have been done that can potentially keep that run going. That's kind of my question. And I also believe that I've seen some significant bottoms, and in my mind, what we saw in December day after Christmas was a significant bottom, and that was a really big reversal day. And so that all kind of ties into my question that if you think, even though we've had a good run, it can still be sustained for a period beyond, where we're at right now. That's my main question.
So the answer to your question is yes. I believe that is the case. And I believe that is the case because it's based upon the signal here of taking a look at the Dow priced in euros. And if you go back and you study this chart here is what it's trying to communicate to you and I is the global flow of capital. I have another tool which shows all kinds of instruments, and I just I couldn't find it in time. My apology there, but I already know what it's communicating to us. So I'm gonna use that information and apply it here. So when you take a look at the Dow, which let's just call that the trophy horse, may not be what is sexy and that all of our listeners want to invest in and so forth, but it's where the big money flows out here. And if we take a look at the Dow and look at the run just used from 2009, I would argue that the actual bull run began in 1974. I was trying to find the island bottom candle. I think it's on a weekly basis that's out there. I'm going to argue that that was really when the bull market began. Brent, on average, there's at least one correction. Doesn't happen, it's not a guarantee, but on average over the last 130 years, there's one correction every year. There's a correction that exceeds 20%, which people call a bear market. You and I that use Fibonacci, we kind of are trying to figure out who the heck came up with that, but nonetheless they did, and so on average it's about 3.5 to 5 years where we see these 20% pullbacks. Well, we got that this year out here. If I take a look at the Dow, and I apologize if I'm jumping around out here, but just to walk through in my mind, the Dow made a higher high priced in euros this month. Now, this is a quarterly chart. Maybe not May, maybe it was April out there. But if you go back and you take a look at the Dow when it forms its high, or really most markets when it forms its high, but in this case, we're going to take a look at the Dow, especially because it's a U.S.-based market. It never makes a significant top where it has topped in euros and not in dollars. So the Dow in dollars is going to at least make a higher high. What happens if the Dow price in dollars, euros, yen, and pounds is at a new all-time high and we see some other significant reversal patterns or something out there? We'll have to address that later. But at this stage here, and if I could show you the other chart, the Dow, as great of a run as we've had since 2009 price in dollars, is nothing compared to the run that they've seen for the Dow priced in euros on a percentage gain basis. In fact, in terms of yen and pounds, we are at a higher run rate than we are in U.S. dollars. It's an indication that the global flow of capital is continuing to pour into the United States. Granted, we're going through a consolidation. We're in a seasonal time period right now, an unfavorable seasonal time period. But if we take a look at even Treasury bonds out here, there's a huge rush to whether we look at T bonds. I was going to try to find, let me just do this here. It's going to be easier. I think if we just take a look at T bonds themselves, you know, they've been moving higher. What is that all about? Well, what that's all about is the fact that global flow of capital is trying to park themselves, the capital itself, into U.S.-based products out here. And so that's why we're also seeing this move in Treasury bills as well. So I believe that capital is going to continue to flow here. It's not flowing. If you take a look and you study longer term charts, it's not showing that it's flowing elsewhere. It's not like it's even a tie with regard to where the global flow of capital is coming to. So I believe that if we actually took a look at a quarterly time frame chart for the Dow, we can identify a large A to B equals CD pattern that is underway and is in place out here. Now, this is the small A to B equals CD pattern. This is just the one off of the 2009 low that gets us to 27,251, which is very close to where we got to when we made that high back in October. But the next level is 30,000, which is I absolutely believe we're headed to that 30,000. Whatever the number is, add some additional some hundreds to it or what have you. But I don't think that is even the end. And if we were to really go back and create an even larger A to B equals CD pattern, that's what I believe is underway, Brent. When I look at everything that's out there, that the markets are going to, U.S. markets are going to be moving higher and at the expense of the other markets. Now, because of that want to be into U.S.-based items, this is where things get a little bit wacky out there. Because what that's going to do is it's going to be, well, let's just say that, we've got about 30 seconds, and we come back to commercial. Formulate some questions, or what question do you have off the top of your head that I've said that don't make sense to you, or what have you, just so we can talk through that further. Because I think it's a good conversation, and everybody that's listening wants to hear, those thoughts too, and yours as well.
I think you've touched on it well, Steve, and sounds like you're on the same page. I know you have talked about it at different points, and it just makes sense to me that we're in a period that can be sustained, given what's been done with the deregulation. The tax cuts were helpful. There's certain things structurally that make a difference at last, and so that was my main question.
Yeah, no, I think that's just a plus. But the other side is what it all boils down to as traders and investors. Are you making money in your local currency? And if you are, you'll keep investing in that product. Right now, that's the U.S. stock market, and I think it continues. Brent, always good to hear from you. Thanks for the call, and we'll look forward to speaking to you soon.
Thank you, Steve.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
welcome back, folks. So I found the table that I was searching for during this past breakout here, so that I can share with you. And we'll go on to the other folks that have sent in questions out here. But the most important thing that you can do for yourself, and thinking as a longer-term investor out here, is just simply, and especially understanding that in today's day and age, when we've got access to all this information easily, that you as a trader, you think typically, now I know we have international folks that are listening in on the show specifically, so each of us think in our own local currency. If you're listening to me from Australia, which I know we have a good group of people from Australia that listen in, or to the archive, you're thinking in terms of what's your investment payback in your local currency. Now, if you take a look at this here, and we're looking at, in essence, the general major markets out there. In the upper left, you've got the Dow, and you can see it priced both in U.S. dollars, euro, not both, but U.S. dollars, euros, yen, and pounds. Remember, I had mentioned to you, now this, Brett, in essence, takes us back to the low in 2009. I've got it on an early basis. It's not going to be like March 9th, but it's close enough. Here's what you can see, because we're all using the same, or I'm using the exact same benchmark here from a quarterly standpoint. The Dow, beautiful run, which is up 312%, or the rate of change is about 300% and 312% over the last 40 quarters. Pales in comparison to euros. So if you're a trader in euros, you tell me, if you're 416%. Hey, how about in yen? Above what we've seen here in dollars, 368%. In pounds, you're sitting over there. You've got May dealing with Brexit as best she can. She's trying to screw it up. She basically doesn't want to accept the vote of the public. It's amazing that they haven't even had more outrage over there. I don't want to get political, but if you do believe in voting and you get a result, seems to me you want to see that happen. But let's not go there. But if you are sitting there in pounds and you're wondering where should you be investing, guess what? The Dow in pounds is the leader in rate of change over the last 40 quarters. Now, granted, we can go back and look at shorter term timeframes and so forth, but the reality is here, compare that to the DAX. The DAX, let's just use pounds. You're up 429% in Dow terms, 220% in terms of the DAX. 122% in terms of your own FTSE out there. Where are you going to put your money? The FTSE or the Dow? The FTSE or the DAX? And the DAX has got, you're trying to break away from the DAX, so to speak, in Germany and in that export economy, so to speak, out here. Well, what about the Shanghai? Let's go over to Asia. Let's go to Hong Kong, or let's go to China. You know, what's the Shanghai? The Shanghai, 28% rate of change since 2009. That is not where money is pouring into. It's not pouring into gold. Hey, at least it's up 56% in the last 40 quarters out there. T-bonds are up 120%. All right? Take a look at the Nikkei in Japan. Nikkei in pounds, 171%. The Hang Seng in pounds, 97% rate of change out there. How about the emerging markets out here? 64%. What about light sweet crude? It's down 32%. Commodities have just been hammered, in essence, since 2009 out there. Of course, Brent, myself, Z, many out there are looking for the next commodity run that will be out here, and it will happen. Wheat, just look at wheat. Wheat down 50% rate of change for the last 40 quarters out there, and then just simply Goldman Sachs Commodity Index. So this really is intended to kind of give a global picture that really helps Brent answer the question globally, you know, where are things headed to? And they continue to head here. We see it time and time again. And the best signal is, I'm not saying that we're not going to have some type of retracement. For goodness sakes, we're in a consolidation. We're in a consolidation, and you know as well as I know that we could experience the bottom of that consolidation. We're in the unfavorable seasonal cycle. It could happen anytime between now and basically mid-October out there, you know, which gets us down into the, and this is, I'm looking at the Dow Equity Futures contract, into about the 23,000 level out here. So this is the market that we're in, but the bigger picture, what we really do want at time, what we'd love to see is another big flush to the downside. Okay, so let me skip over so we can get to some of these other questions out here. One earlier from Z in the Den was asking about a potential top inside the ES Mini. And Z, if we use the hourly time frame chart out here, and how likely, we use the hourly time frame chart as our source for information. What we can say is we should expect some type of pullback or retracement to have begun, because from its topping signal out here, even though there's an A to B equals CD to the upside, I don't have a bearish reversal candle. I will go ahead and say, hey, we do have a topping pattern out here, and that's that Tommy DeMark setup 9 count, where the last bar, as we came into 130, that was the higher high. As long as we don't take that out, then the answer says, with regard to the ES Mini, yes, that is an absolute possibility. Pullback, where would it pull back to? First would be Stevie's green line at 28.76 and some change out there. But here's the cool thing, Z, is that I would say if the highs get taken out, the high of, as we came into this last half, oh, this is an hourly chart, I apologize. This was the 1 o'clock bar. I was thinking I was on 30-minute hourly. So if that high 28.94 gets taken out, then we know the answer to your question. Well, I would say the answer to your question would be no, that this is not the high that creates the type of tops that you were looking for. So I would say pay attention and watch the hourly chart here, just like we're watching the hourly chart in gold to see if it does its thing to help us spot and identify a bottom out there. Here's what's going against that. Unless we do see this pullback, and certainly tomorrow will be a big answer with regard to your question out there. Does the ES Mini close below Stevie's green line? And right now, that green line on a weekly basis, 28.76 and some change out there. We're 28.87, so we're basically 20 points above that. Because closing above this, John, Z, Brent, everybody else that's out here, closing above this gives us a weekly rising price oscillator above zero, only in wave C on a weekly count out here. And that says a new all-time high in the ES Mini is more likely than not. Now, if price is deflected by Stevie's green line and there's a close below that, and there's every likelihood that that's what the outcome will be, but I won't know. It's every likelihood that that's what the outcome will be. That would be a piece of proof, John, that the counter trend rally was over and that the seasonal sell in May is in place. So even though oftentimes we spend a lot of time on the shorter term time frame charts out here, right now it is the weekly chart that I believe will generate that most important message for us, and which leaves us till tomorrow to answer that question. So that's what I'm looking at out there, and hope that helps answer your question. So when we get back, we're going to go take a look at TGT. Looks like IVV. Looks like, I'll have to read through the other ones to figure out what it is we're going to look at. But we are going to, hey, by the way, well, we can get a little bit to TGT. And so in TGT, here are the 3 time frames. The question is, can you share your thoughts to buy TGT? Well, first, you're below the daily, the weekly, and you're really close to, you've tagged the monthly, 69.73. When we come back from this, I'll go look at my other daily time frame chart, see if there's any bottoming signal in a target, or target, as they say. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at the target out here, and the question is there some type of bottom? And from the TAS market profile charts, the answer was no. Yes, there was a level of support that was hit at 69.73. That was the bottom of the monthly profile. But lining up with that, what we would be looking for would be some type of bottoming signal on the daily time frame. Now, the daily time frame made that Rhodes momentum indicator top was a key reversal bear sash candle on April 22nd. There was a break of support in a big way. That was on April 26th. Then there was and that was the gap to the downside. And that support was the bottom of the daily box out there. Then you had a break of the breakout level. That was by that red horizontal line. That took place on May Day out there. And now what we see as we take a look here, we don't see any kind of significant, we don't see any patterns out here to suggest that a bottom is in play. And so I think you got to sit tight there. I'm not going to call where that next bottom might show up. We just have to look at patterns as they form out there. If we look at the weekly time frame chart, and just know that this week it broke through the bottom of that box out there. This was a trending to the upside move instead of boxes on the weekly time frame, because the current box that it's broken through it formed above the prior one. So this is a pretty significant break that we're seeing. And even though we can't call it an A to B equals CD to the downside, if we look at the weekly chart out here for target, it really could be. And the reason why I say that it could be is this is fairly bearish. When I say it's fairly bearish, when the line, Stevie's line, red line, or green, turns different colors, such as Target did on the trading session of March, the week of March 29th out there. What you and I know is eventually we're going to see price and that line catch up to each other. And that had turned to green. And what really should have occurred is price should have pulled back to that level, as it did on April 26th, the week of April 26th, and then bounced off of that, which it did not do. And then on a weekly basis, we could see support crashing through the breakout area. But I'm not worried about that one because that had already taken place back in November. But here, it looks like what price is going to do is go revisit the lows, longer term, the December 28th level, and perhaps maybe take those out. That I don't know. There's your A to B equals CD pattern. But I do not see a buy entry point into target. So hope that wasn't too long with regard to that. But there you go. Now, James writes in, hey, Steve, do you think the IVV, so let's pull this up here, IVV. Let me get this thing rolling on the other charts. IVV is the iShares Core S&P 500 ETF. Okay, do you think the IVV is forming an A to B equals CD down? And if so, do you think it can go down to 247, 276? So it's a great question. I think it has that possibility. I think it definitely has that possibility that that's what it is doing. Now, with regard to the IVV, James, and I know you're looking at a daily basis out the secondary email out there. Do I think we've hit that stage yet? Here, if we take a look at the ES Mini, and that's what I'm going to do. It looks to me. So here's what we're watching for, because you specifically, James, were asking about the daily time frame chart out here. So here's what we know. What we know is that price found support, held support, being that TDST line out here. It did that a couple days ago. There's an A to B equals CD to the downside. So in essence, it's made a Gartley buy pattern. All Gartley patterns have 5 potential outcomes. Those are retracement levels, 100% move, and then a new A to B equals CD to the upside. I'm not worried about those just yet. What I'm really focused on, James, what I think you should be focused on as we speak, and I'm going to use the ES Mini versus the IVV. I'm going to pull up the IVV so you can watch it, is the price level of 28.97. That's what it is right now. If the ES Mini closes above that, not that it starts to disqualify any kind of A to B equals CD to the downside. Period. End of story. End of Stevie's story, that is, if price is able to close above that level. Because then we get back to that rising price oscillator above zero. We looked at the ES Mini, which right now is trading just slightly above that. So it's going to be easier for us to know those parameters when we see how the weekly ES Mini closes out. And I'll give you the S&P as well. And here's the IVV. So I'll bring over the daily IVV. And the daily, if we were just trading off of this, you would go ahead and fire away to the short side right now. Because in essence, that's what price hit earlier. 291 in change, and the actual high today inside IVV has been 291 in change out there. So in other words, it's hit that resistance level. If that's your thinking, then go ahead and fire away now. Yeah, it's not complicated. My preference is to go with the signal inside of the ES Mini, especially in taking a look at that weekly chart of the ES. But maybe I'm splitting hairs out there. But let's just take a quick peek of the S&P 500. It's going to be similar to what we just looked at in the case of the IVV. Its green line is at 28.95. The level that we got to today was 28.92, so it's close enough for me and my work. So this would be the place where if the market's going to turn down, maybe generate that A to B equals CD to the downside. In essence, it's what we hit earlier, maybe at around the 1 o'clock time frame, 12:30 to 1 o'clock, when the ES was, kind of hitting its high out there. The weekly time frame chart, let me just give you that. I can pull this up too. Luckily, right now, I've got this up on the system here with my weekly levels to be paying attention to. So we pull over the weekly, what you're going to see, here's where you have a contradiction of terms, so to speak, signals. We can see that the S&P is also above Stevie's green line, and that's 28.72. And if there's a close above 28.72, I would say it's not out of the question, but it is severely discounted that there's an A to B equals CD to the downside that's underway. And instead, what we would be looking for is at least for prices to continue to rise, at least through tomorrow. And we'll have to come back and take a look at Sunday or Monday. But at close above this, it gets really sketchy. It just gets sketchy. It may be more of a representation that the general market, we took a look at the Dow, is in a consolidation. But that's what I have to go on, and I hope that helps answer your question. I'll summarize it this way. We're in the unfavorable seasonal cycle, and if these levels of resistance do hold by tomorrow, then the A to B equals CD to the downside should be in force and should, in fact, follow through. But we're just going to need that information come tomorrow. If we take a look at John F. writes in, and he wants to take a look at ticker symbol AWR. AWR is, let me change over to my other sets of worksheets. That is American STS Water. So it looks like it's a water company out there, AWR. And the question is long-term investment. It was, that's for sure. Is it now? Oh, that's a different story out here. So look, this is bullish no matter how we look at it, no matter how we slice it. You're above the daily, you're above the weekly profiles, you're above the monthly, and you're above the quarterly. And we need agua. I'll drink to American water out there. I don't know what the STS stands for. When we come back from this breakout here, what we want to do is to help John assess where price might be headed to and what to be watching for. The what to be watching for looks like it's just simply going to be price continues to rise due with less relative energy out there. But when we come back from this breakout here, we'll have it thoroughly, and I do mean thoroughly, evaluated, try to figure out where this is likely headed to. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
All right. righty, so back to ticker symbol AWR for John. John, here is the, if you were in it, I don't know if you are, I would stay in it. There is no reason to get out. In fact, if anything, there's a reason to stay in, which was the most recent. So here's a monthly chart. We've got the A to B equals CD pattern out here that's in play. And if there was going to be a top, it would have taken place the week a couple months ago. That was in February, but that high has been exceeded. That suggests that that 9 count is kind of regenerated. It's moving higher. We can see that those counts, in fact, have done as much, and price should be headed towards its next A to B equal CD extension level, the CD level of 78.71 out there. So that's where it appears that AWR is headed to. If you're not in it, you know, man, then you got to you'd like to buy some kind of a pullback. I don't see one in play as we speak right now. So I hope that helps you out. James, we already answered your question, and Hot Dog wrote in. Let's see if we get to this in the last minute. XOM. So the question is thinking about going long XOM. So can we find some type of bottom? Hey, you're within inside a daily profile. Price could easily bounce to 77.60. And that wouldn't necessarily say that that's a long position. That would just be a counter trend rally. Close above 77.60. I would say, Hot Dog, you are on to something. Again, looking at XOM, what it's done today, it's gotten up and it's tested Stevie's red line, which is at about the 77.02 area out here. So no other bottom signal that I see in place here for ExxonMobil. Today's rejection of that level would suggest it'll go back down and test support again, which is 75.47. That's the bottom of the daily profile out there. But I do not have a long signal as we speak inside of ExxonMobil. It held support. That breakout area was right back here. By the way, it was happened to be a gap to the upside. But that's the watch the February 12th level, 74.82. ExxonMobil closes below that. It is most definitely not a buy. Folks, thanks so much for being here. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on fantastic PGA Friday. Have a great Thursday.